Roses are red, violets are purple, not blue. Looking for a home? You know what to do. If your heart is set on the home of your dreams, let's find your love nest. Call the Sharp Mortgage Team. No need for Cupid, arrows, or bows. Just a cozy house where such happiness grows. Whether it's a cottage, a condo, or a mansion grand, our team is here to lend a helping hand. Imagine a kitchen where you cook up delights, or a backyard oasis under the stars at night. With rates getting as sweet as candy hearts, homeownership is where the real romance starts. Forget the cards, the flowers, and the candies. A home of your own would be just dandy. So this Valentine's Day, let's start a plan. To talk about your loan, we'll give you a hand. No more renting, let's make a fresh start and turn a house into a piece of your heart. Happy Valentine's Day wishes made for two from the Sharp Mortgage Team. We're here for you.
This is the Triad Podcast Network.
All right, everyone, we're not quite there yet, but as we always do in February, you get these days that start to feel like spring, right? You get this false spring, and you think, oh man, are we done with winter? The groundhog didn't see his shadow or did see his shadow. I don't know which one means which anymore. But I mean, look, there is nothing that means spring more than talking real estate, right? Blake, are we going to be in an early spring? Is spring still going to come at the normal time? I mean, that's when people start thinking about buying and selling homes. Spring is when it gets absolutely nuts in a lot of ways. Blake Ginther from the Ginther Group in Winston-Salem, our real estate expert, and does our real estate podcast every month here on the network. Blake, how are you? Are we in an early spring?
You know, it's interesting. I mean, I would say we definitely were those first 3 weeks of January. Honestly, I thought I commented that it felt like we were in March in those first 3 weeks. Then we had that typical like crazy cold stretch followed by random warm rain. And nothing will make people stay in Winston-Salem than both of those things. So, yeah. We about a 2 week stretch of crazy cold for a week and then like just straight rain for a week. And it slowed things down. We're starting to see it pick back up again. But that's not uncommon for this time of year. And as we sit here now and approaching mid-February, it definitely is feeling like I'm having more conversations around real estate, and I've talked with several folks who are definitely selling this spring. So it does feel like it's picking up. We are going to have, I think, a warmer February than we had last year. And that also typically does help real estate. And, we were talking about it though. I mean, rates ticking up a little bit, it might actually push those who are waiting. A lot of people have been waiting for the rate to drop, as we said right before we hit record.
Yeah.
And they're disappointed, right? They're disappointed that it's actually going the other way.
Yeah. Okay. So where are interest rates as we speak today? We're recording this on the 8th of February. What are they today?
Most of them, I mean, again, they vary because the Fed didn't drop rates. They didn't raise them either, but people need to understand that, right? That there's not a direct correlation. There's a correlation, but not a direct. And so a lot of mortgage industries raised their rate because they lowered them anticipating the Fed lowering theirs. So when the Fed didn't, some raised back up near a 7. We were in the mid sixes. Now on average, I think you're seeing around 7. But you can still get in the upper sixes with certain products and certain lenders. Okay.
And let's see, there's so many questions I have about interest rates, but because it's fascinating. How many people are out there that are waiting, like you said, that are waiting for interest rates to go down before pulling the trigger on something?
It's funny. You before you finish the sentence, I was like, you're old if you find interest rates fascinating, Adam.
But fascinating and interest rates in the same sentence.
You finished the sentence. He didn't mean that interest rates are fascinating. I mean, there are maybe
they are. I don't know.
I mean, I guess if they are, then that's how you know you're old. And I am a little fascinated by them because they directly correlate to my life as it pertains to real estate. I mean, I do think there's a lot of people timing. That's why I said before we hit record, I feel like there's a lot of folks timing the market or, should I do this? And interest rates are playing a big factor. And one of the lenders who you have on Triad podcast network, Ashley Mackenzie Sharp, did, put out there in social that she doesn't think we're going to see fives anytime soon. I don't either. I just don't think our inventories across the country, but specifically locally, are going to get high enough to drop into the fives, because that if we get into the fives now, we would have a bonanza of a spring, I think. And I don't think that's good considering we still don't have enough inventory. So if you're waiting for fives, you're definitely not, you're going to be disappointed for 2024. So basically you're punting to 2025. And as I said, again, I don't know, man. I don't know if our inventory is going to get high enough that they're going to need to go into the fives. Therefore, I don't know why they would.
Yeah, are you seeing that there are just a lot of people out there that, I mean, it doesn't really get into specifics when you say, well, I'm waiting for interest rates to go down before I purchase a home. But are you seeing that there are a lot of people out there that are saying what we kind of saw when Ashley put the question out there, which is, when rates get back into the fives, then I'll get back into the game. Are you seeing that a lot?
Yeah, I think I am seeing a fair amount of people who have put themselves on the sidelines due to pricing, price costs, and then affordability of, not just what the home costs, but what they're able to afford via rates. And I think that, Ashley talks about it on her podcast. I'll throw it out there. In new construction in particular, we are going to see, I think, some 2-1 buy downs. I think where people are going to wrap in closing costs, seller paid closing costs. Only a seller can pay for it. A buyer cannot. Where they wrap in a temporary purchase down of their rate. And they get that money back, right? So if the rates drop and everybody's wrong and we somehow do go into the fives quickly, they can refinance and they'll get all that, if on a $550,000 house, we're talking about $13,000. So, and all they're doing is upfront paying the extra interest of those 2 years, which makes it more affordable. And most people feel confident that rates will be lower in the future, but we don't know what that looks like. Does lower mean 6? Does lower mean 5.5, 5? And again, not this year, maybe next year, but maybe not until 2026.
Because like you said, they're not just going to lower rates to lower rates. There has to be a reason to do it. I mean, we saw that the Feds increased interest rates because we needed to put a slow to inflation, right? Yeah. And in this case, as it pertains to real estate interest rates, if the inventory is low, then you don't need to motivate people to buy more homes. And so you're not going to lower interest rates, right?
That's right. And as we sit here on the 8th, I want to say, so everyone's going, well, why would I buy, right? Why should I buy right now with higher rates? And if you're renting, well, that's a reason enough, most likely, to want to buy. But also, I think that I've been saying this, we still are in the mid fives in Forsyth County inventory wise. I anticipate that we will be lower, probably mid fours in March and April. And that's not good for buyers, right? When we get below 500 inventory of active homes in Forsyth County, that's not enough. Really, we would prefer 800. Realtors would prefer 900 because that's a level market.
Yeah.
550 is still low. And if we get below that, which I'm anticipating we will here in the coming weeks,
really,
so what buyers need to hear is you still have a better chance, right? And everybody's heard date the rate, yada, yada. I feel like we've beat that drum, but I don't think they understand truly that if they get a better interest rate, they're going to have a different problem.
Yeah.
So you almost have to pick your poison, right?
Yeah. When inventory was low before, it was because interest rates were so low and there were so many buyers out there. But it's different this year, right? Inventory is low and there aren't as many buyers because they're scared away by interest rates.
Yeah, or they've already purchased, or they've already signed a lease, or they're not sure if they're going to, be moving, yada yada. And there is definitely, some of that, like some economic factors. But we did have the Winston-Salem Forsyth County economics, somebody on their team come to a discussion, a roundtable on Tuesday, and it was interesting to hear the growth of Forsyth County. And that's the number one question I ask people around here. I go, listen, do you think more people are moving to Winston-Salem or moving away? And the answer is a resounding every time moving to.
Yeah.
And then I go, so tell me again why your plan is wait.
It's not like there's going to be less competition.
And do you see a ton of new construction? Like, we're not that city that's overbuilding. We're not.
It's time to get serious about your financial future. It's never too early, but it could be too late to get started. And that's oftentimes the hardest part, getting started. How much do I save? Where do I invest? Do I save for college or retirement? How much for each? And who do I talk to about it all? Okay, we'll keep things simple for now and help you answer the last one. We recommend you begin with a local financial advisor. And that's Jennifer Johnson of Three Magnolias Financial Advisors. She'll sit down with you for a complimentary introductory consultation and go over all of your questions. Get started on the path to achieving your financial goals. Visit threemagnoliasfinancialadvisors.com or call 336-701-1600. Get comfortable with your financial future. Three Magnolias Financial Advisors. Retirement, financial planning, and investments. Securities offered through Cetera Advisor Networks, LLC, member FINRA SIPC. Investment advisory services offered through Three Magnolias Financial Advisors. Three Magnolias Financial Advisors and Cetera Advisor Networks are not affiliated. Cetera is under separate ownership from any other named entity.
Anyhow, I think, the other thing that I'm hearing a lot of clients who are kind of putting themselves on the sideline about moving primary homes. They're going, but I might consider purchasing a rental, right? Investment property. That's very common right now. And I would say their needle needs to drastically move if they were considering this several years ago and they haven't re-engaged recently, because I just bought my first rental property since 2020, and I paid probably $80,000 more. So which is essentially, honestly, 40%, 35 to 40% more than what I was comfortable mentally paying for this home, given my purchasing of investment properties prior to 2020 and earlier.
Yeah. And things have changed quite a bit since then.
They have. A brick ranch that I love, a good old brick ranch with hardwood floors, that needed a ton of updates in Winston, in a desirable, good equity growth opportunity zone, would have been $100,000 to $130,000, $140,000 pre-COVID. And now I just paid $205,000.
Yeah.
And by the way, after I spend, and you don't have to do this. My MO is typically to upfront and, inject more capital to make it prettier, to get a better tenant, get better rent, but also a better tenant. So I'm putting, I wanted it to be, 15 to 20. It's probably going to be closer to $25,000 worth of improvements into the home, because it will get me it's investments. And by the way, I say that, do the math, right? 205, let's say 25,000, I'm in 230. I could sell the home tomorrow for 300. As soon as I'm done renovating it, it's a $300,000 home.
Yeah.
So I've got equity, right? I've built $70,000 worth of equity pretty much instantaneously. And it cash flows from an investment perspective. And, all because I was willing to do two things: get my hands dirty, but buy when nobody else was willing to buy, which was in early January.
Yeah. And the other thing too is, you never said to yourself, you mentioned, like, you paid more than you would have paid for that home several years ago, but you didn't say to yourself, well, I'm just going to wait till the price comes back down. I'm going to wait a little while and see if I can get it at a better price in 6 months or a year.
I know
that wasn't going to happen.
it's not going to happen, right? And I know that definitively. And I think that's the number one thing I want. If people are listening to this, I assure you that I'm not being braggadocious about buying a rental property at all. I'm quite the opposite. I'm saying I had to get over, my what used to be my ability to buy properties on the cheap, right? That $205,000 for a ranch is now in a desirable location is now on the cheap. That's the new on the cheap.
Yeah, because you said it would probably sell for a lot more than that now.
Yeah, I mean,
after you're done with your work.
Correct. And for the record, I'm not handy, right, at all. My handiness comes with this, and I'm showing a pen as we do this podcast. And I am writing checks to improve this home, and ultimately I'm helping a client buy her first rental property. She closes tomorrow. And I'm doing the same for her, right? I'm helping her utilize my contacts, and she closes. I've got things lined up. She's going to get a new roof put on for like half of the cost of what she was anticipating, what her roofer told her. My guy Ronnie's doing an awesome re-roof of this tiny little house for like $4,300. I'm like, yes, that's awesome.
Whoa,
I know, it's amazing. And she got a quote for like 78. So she's happy.
Yeah.
To know my guy. I hope he does a good job. Now he better. And painters, it's our job. We say it all the time. It's my job to be Google for my clients. I just want them to know they're going to have to reset her expectations. She's buying a $216,000 house, little tiny little ranch in a great location. It's going to cash flow. And, she is going to have to infuse some money into it. She doesn't have to. She's choosing to get a better tenant, get a better rent. And it's not sexy. And she realized, that pre-COVID, this was $140,000 house, $150,000 house tops.
Mm-hmm. What are the things, and I would imagine being willing to do the work and get your hands dirty is near the top of the list, but what are some of the things that people use as reasons not to get involved in the investment property game?
I think they think about the thought of being a landlord sounds terrible to most people.
Yeah.
And I would say, I mean, I get it, but that's why you hire a property manager. My property management company does all of my rentals and 180 or 190 others. And they take everything from start to finish. They get your tenant, they check on the home's well-being, they renew leases, they do start to finish everything. And and they are well worth the 10%, right? I go, so if you got a $2,000 home rental, you make $1,800, but you never have to do anything with it, right? As a landlord, you just get your money.
Other than pay for the cost of anything that might need to be repaired.
Correct. But they
contract it and they line it up. They get it all figured out. They're the ones that the tenants call when, hey, it's the middle of July and my AC just went out.
And what they're starting a new program, and I totally agree with it. And I think that some people are going to struggle with this mindset, but they're actually going to start taking upfront lump sum to keep people from having to feel nickel and dimed on minor repairs. People are still going to approve the minor repairs, but bottom line is remove the headache of having to pay for anything and yada yada, which I think is super smart because every year there's a couple $100 worth of stuff.
Just because you don't want to be a landlord, yes, you might be able to retain that 10%, but even if you don't want to be a landlord, doesn't mean you can't find something here. How do people tend to? I mean, look, because with the investment, you've got to be able to find the money to be able to actually invest.
Yeah. Well, and I think most people have opened up home equity lines of credit, right? I mean, if anybody who bought a home several years ago has
you've got equity.
You've got equity. So you have a home equity line of credit. It's supposed to be, by the way, improvements on your home, but Just don't quote me on it, but the reality is people use equity lines for a variety of things, and it is yours to do what as you see fit. And if you have $100,000 in this example, right, in the example I just gave of equities, just untapped, you could easily buy a $200,000 home for essentially $50,000, right? 25% down payment, which is typical of an investment property loan, which by the way, you get 8 of.
Yeah.
You got $50,000, and let's just use my example. And I had $25,000 worth of improvements, right? So you took $75,000 out of your equity line. You're gonna basically in a 3-month period, that you can easily refinance. Now, my home will appraise for that I bought for 200 and 150 down and then 25 in. So I can refinance for realistically, again, 75% of 300 is what? Let me do that math real quick. 300,000.
I was told there'd be no math in this episode.
Sorry. So you would refinance for 225. Boom. The 150 note that you had on that property is now $225,000, right? You're still cash flowing because that's fully amortized now. That $75,000 gap that you took from your home equity line paid off, and you own a property. People go, all right, Blake, but do I really want to own a property? All right, let's follow this through. It's worth, you gain $70,000 of equity right now. I promise you that a $300,000 home in a location that is high equity growth, like full example, anything near the hospitals, anything near Ardmore.
Yeah.
Right. And you had a home, right? Anything in that area, it will gain. If Winston in general is 3 or 4%, it will gain minimum that, probably more.
Mm-hmm.
And fast forward over in 15 years from now, my $300,000 home, I promise you, will be north of 500. Right?
Jeez. Yeah.
It will be. Fast forward 15 years thereafter, right? So 30 years later, this little $300,000 ranch will be north of 750.
Yeah.
And let's just say I'll be 44 here this year. Let's just say that I die when I'm 80 and my kids inherit a home that I bought, right, all in back in 2024 for 220, I think 230. I'm all in 230.
Yeah.
And somebody else paid off the note. The note's completely free and clear. My kids inherit a product that is $850, plus $1,000, right? It's an $800,000 gain for them. And people go, oh yeah, but Uncle Sam's going to get that. Okay, that's another podcast. But you would have a family estate.
Yep.
And right now the family estate wealth is, I believe, 8 or 9, or is it 11? It's something really high. I think they are projecting that to come down. Trump raised it to like 11 something. That your estate can pass along $11 million worth of assets. And that could come down back down to 5 or 6 million. Whatever. Okay.
Still going to be well underneath that with just that one home you're talking about.
Right. Yeah. And go buy 1 or 2, right? Go buy a couple. If you have 3 kids, go buy 3 over time. Mm-hmm. And now they all inherit $800,000 or more when you die.
Yeah.
And you will it correctly, and it's not taxed. And they can either keep it and get that monthly rental, or they can cash out, right? And it's up to them.
Yeah. I mean, it's a pretty nice little life insurance policy, right?
Which, by the way, people should do too, right?
Yeah,
do that too.
Yeah.
But this is just another thing.
Yeah. Well, I thought interest rates were going to be the most fascinating part of this podcast, but I've been proven wrong. That was a great explanation. If people want, of all the podcasts that we've done, Blake, over the years, if people want a good 5 to 10 minute sample of why Blake is such an expert in this field, just go listen to the last 5 minutes of this podcast.
Where I rambled?
It wasn't rambling, man. It was sound advice. It was great. I was just absorbing it. I don't know if I could repeat it all back to you. I mean, I have to go back and listen to it a couple of times to make sure that I understand all of it, but it makes sense. And so look, if you're a buyer and you're not finding what you want and you're not necessarily in a place where you have to move, there's another thing you could try.
Yeah. Yeah. And I want everyone to know that I have a BFA in theater, so I am not a genius. So if I can figure this stuff out, I promise you can.
Yeah. He had to break out his calculator on his phone to do a little bit of that, to do 75% of 300,000. And so it's fine.
Pretty simple math. Should have known it right away. Didn't.
Nope. Neither did I. That's okay. We got there. All right. Well, Blake, this has been great. If people want to get in the game in whatever way, shape, or form, and have realized that, if I'm trying to wait till interest rates go down to buy a home or become a buyer, I'll be waiting a long time, and I don't want to wait that long.
Yeah.
How do they reach out to you?
So go visit our new website, which looks so much better. I'm not embarrassed to say theginthergroup.com, theginthergroup.com. And so that's how you find us on the interwebs, or you can give us a shout at 336-283-8689, 283-8689.
And right there, the great picture of you and your entire team right at the top of the website. Man, that's a good looking group right there. Good stuff, man. Very informative, very educational. I know you got a big week for you and the fam coming up, so man, all the best.
Appreciate it, brother.
All right, take care.
Hey, thanks for listening to this episode on the Triad Podcast Network. Our mission is simple: provide information, advice, and stories about the people and places that make the North Carolina Triad such a great place to be. You can find us by searching Triad Podcast Network on Apple Podcasts, Spotify, pretty much wherever you like to listen. If you like what you heard and want to support the show and those that contribute, we would truly appreciate a rating and review on your favorite podcast app. It helps spread the word along, as do your shares on social media. You can find us on Facebook, Twitter, Instagram at Triad Podcast. To get in touch with us, simply email info@triadpodcast.com. Thanks for listening.
This is the Triad Podcast Network.